entire generation not participating in long-term wealth building opportunities. I mean, we know of people who build to wealth. I mean, here in Ghana, even beyond through investments. Warren Buffett is one of them. A lot of investments and all of that. And today they are making. I mean, they are wealthy. They are millionaires, and so they are billionaires even. So if our young people are not investing, what does that mean? Are we? I mean, should we be worried about all of these things? Is this a case of financial responsibility, or are young people simply responding to economic realities? Maybe inflation numbers. I know the inflation is down, but of course, people are saying that they can't feel it in their pockets and all of that. Unstable income, is it unemployment? Is it a high cost of living? Perhaps this generation is not disengaged, but just investing differently, maybe through side hustles, digital ventures, and maybe flexible income streams over the traditional assets like treasury bill. What exactly are the issues? And this one, we want to unpack all of that data, understand the mindset, and explore some practical steps that young Ghanaians can take to build wealth despite economic uncertainty. And joining me in studio is John Che. John is a financial analyst. I enjoy talking to him all the time, and he's here to have this conversation this morning with us. John, good morning. Welcome to the Business Breakfast on Z.
Good morning, Mr. Hammond, and good morning to our viewers.
Right. Good to have you this morning. Well, 43% of our young people, Gen Z specifically, do not have any investment at all. At all. Okay. Should we be worried?
Yes, I think that is very troubling because you see, Gen Z is a whole generation, and they will continue. I mean, everything after the old people are gone. So if you are having maybe people between 20, 29 years not, investing, then that is a serious issue that needs to be addressed. And I think, you see, what is happening currently is because of one history. You know, I think for recent years, from 2022, you know, the Ghanaian investment landscape, even going back to 2018, because of the banking sector cleanup and a whole lot of things, you know, people are really, scared of investment, okay? Because, from 2018, when the banking sector cleanup happened, people lost money. So you could see a certain generation, maybe from 24, 25 coming, you know, the experience that they have had, they feel safe keeping their money maybe in their current account than investments.
Right.
And these things could contribute to maybe what is happening currently. And I think another issue is that, you know, at this age, people want fast accumulation of wealth. True. They don't want maybe investment that a whole year you are getting 10%. Now, even if you look at the current situation, you invest a whole year 10%
for T-bills.
And looking at even
around 8%.
Exactly, and then that generation, you are not earning much. Assume you are earning about 4,000 cedis, and you're able to invest, let's say, 20%, and that 20% is earning just 10% in a year. And you see, if you look at the social media too, people are selling a lot of investment products, and know the outside, because of globalization, where we can now see what others are earning. You know, it doesn't really move us, especially the current generation right, to invest for that long term. For a whole year, 2 years, 3 years before you are getting about 30%. Once they are seeing people making 1,000% in 6 months, people investing in forex and a whole lot of things, clearly they will shift their investment to other needs.
So what I get from what you're saying is that there's a lack of trust.
Exactly.
Because of what they've seen from 2018.
Exactly.
DDP,
and especially when the DDP happened, because of the cut that they did. Because treasury bill, that is seen as the safest investment.
Right.
Ghana here, we have changed that narrative where people lost their returns, what they have planned for, they didn't get for a number of years. So clearly the current situation is not helping much, and that may account for this high percentage as far as investment is concerned.
We're going to continue talking about the why very soon, but what qualifies as investment at this particular, or in this particular context? Okay. Is it just the traditional ones, the T-bills that we know and all of that?
No, for investment, as far as you are, putting aside money to accumulate wealth, we call that investment.
Okay.
And investment could be a lot of things. We have the financial products, and we even have rare assets where people now even go into business. That's also investment. But maybe let's focus more on the financial investment aspect. Okay, now you realize that because of digital transformation, where now people can even download apps and do investment. I've seen even some digital companies like they call a company, SNES, they call a company. They now reach out to the youth to invest with them. So you just download an app and you deposit them when you are investing. So and those things cannot be captured by the traditional way of seeing how investment is. So that's what I'm saying. Maybe the percentage which people, 43% are saying they don't have investments at all, and you could see, at the Gen Z generation, 29, how much are you earning? Looking at transport, a whole lot of things go. It leaves little to invest, and you don't want to invest that little to earn 5% in a whole year. So I feel the youth is more focusing on maybe investing in, education, talents, maybe do online learning, paying for all these things, and that could even account for why we are not seeing that reinvestment happening. A lot of people want to develop themselves and know this whole focus of globalization where they can even get work outside. People are taking a lot of courses on YouTube, a whole lot, and paying a lot of money to get them, the skills needed to thrive in this current environment. So maybe that could be the reason why people are not really investing.
Does a lack of knowledge also come into play?
Yes. You see, even business students, if you take typical business students, which we believe they have gone through business education, they must understand investment. Most of them don't really have serious knowledge about it, because as far as education is concerned, most people just learn for exams. Now we are seeing a lot of people into the art science, which they don't really have any opportunity to learn about investment. So how do they invest if they don't know the opportunities available? And when they really know that for treasury bill is not really earning much, what will motivate them to, invest in those assets?
Right.
Okay, stock exchange is the way. If you look at the global world, whereas stock market is everything today. If you look at America, the Gen Zs are investing largely in stocks because they feel they can get huge returns in short period. By here, our stock market is not too open to we the Gen Zs.
How do you mean?
When I say it's not too open, it's like, you see, you have to make the initial capital requirement to buy shares and all those things very flexible. Maybe an app that you can just go and pay for shares.
But there are apps like that.
Yes, there are apps. But the education, you see, the way, if you look at the foreign media, they are always showing their stock market, the performance. Every day they're analyzing.
On their TVs,
so you see, the education is there. You can clearly see. Here, unless maybe you visit stock market or maybe business news, which is just 5 minutes of most of the media outlets, coverage.
No, but Z is 70%.
Okay, so I think Z is doing well.
Z
is doing well with business coverage.
Exactly. Yeah. That's why we're having conversations like this, because we want to see. We have to turn around that particular narrative, 43% we're talking about. But continue what you were saying.
Okay, so if you're able to, let the education flow where people can see that if I invest today, in 1 week, this was the return on stock market. Clearly, and they are seeing 20%, 15%, and the rest. They know, okay, if I put my money, I don't earn much, but once I put this, I get this. That can motivate them and encourage them to invest.
Okay.
But if you are not seeing those, returns, they feel even stock market, they need to walk to the stock market. A lot of people don't even know the apps that you are talking about. A lot of people, even at the university level, most people don't know there are apps that, so maybe the investment banks are not doing enough, especially with the engagement with the because most of the university students are within that Gen Z group. So if we can go the SHS, we should even start from primary, so that, investment could be a culture that, especially the Americans, if they don't have any investments, like, they feel useless. Because it's their lifestyle, and it starts from, at age 6 we are learning investment. But here, as I say, even business students, we don't really, if you look at the course structure, they don't really focus on investment. And when you even do invest, they don't make it practical for people to start and then appreciate and teach the other colleagues, departments, the best way to invest. So that we need to really, look at the education side of it and let it be part of every course, whatever. Because the point is that as far as human being is concerned, you have to grow your worth.
True.
So whether you're a science student or an art student, whoever you are, investment must be part of your course. And that should even start from the basic. So the child knows that if I invest 10 cedis, I get 1 cedi. This 1 cedi can grow. There's a stock market. So that, as we grow, we will cultivate a habit of investment. If you don't do that, you will continue like this. I'm sure, as we are seeing 43%, maybe now that interest rate has even come down to treasury bill, which the report says a lot of people invest in it. It's now 6%.
Yeah.
6%. So why would I put my money in 2,000 CD? Not even 2,000. How much do we earn? Let's say you 20%, which is about 400 CDs, and you calculate 6% a whole year. Can you imagine? Exactly. So, I mean, there may be the next year report to even be more troubling if you don't take critical look at of these things. Yes.
Right. Okay. You talked about so the lack of knowledge, the lack of trust, and the lack of money, because you keep saying how much we earn. So that's also a big problem, because if people are earning more, then they can put a lot of money in other things and all of that. Okay. How much of this is also a matter of our economic realities?
Yes. Okay. So you see, I think I was calculating, how much should be paid to maybe an average worker, and looking at their transportation, assuming even you stay far away and you take transport in and out, it's about 60 cities. If more 60 cities, about 22 days, it's getting into about 600 to 700. That is just in transportation. Do you get it? Then you go to, the person has to eat morning, afternoon, evening. Assuming he even is 30 cities. This is just the basic. 30 cities times 3, which is about 90 cities. Yeah. So 90 times, let's say 22. That's also getting into, thousands. Now add the two. Just transportation and food. Then, assuming you are a Gen Z and you are now started work, because 26, 27, 28, you have started working. You just finished school. So you'll not be earning much. Most people are even earning just national service pay. So looking at the economic realities, you don't have enough to save. That is the reality. You don't have enough to save. In fact, the money that they earn is not even enough to cater for their monthly expenses.
The money even loses value.
People even now, because of quick loan and the rest, they borrow to top up. Especially looking at the current economic conditions. Even though you see inflation is easing and all that, but still prices are not really falling. It's just increasing at a slower rate. So it means that once our wage is not increasing in tandem with inflation, where a whole year we're increasing it by 10%, but you look at inflation going about 50%, it eats away our income, and it leaves us nothing to save.
Right.
So unless maybe employers start to calculate these things, and maybe even if parents will also now top up to make sure, if you want to cultivate the habit of investment, there should be, from even the employer side, parent side, you should be deliberate with the amount you give to your children or even your workers, especially looking at all these things. And it can start from there. So once maybe you are giving the person an amount that can cater for all these things and their surplus, then the person will have something to save. But if we don't care about that, and as far as you are looking for a job, I have to determine your salary. If you don't get this job, you are not doing anything, so you can't survive. You take it like that. So how do you expect that person to save? And you see, if you are making workers suffer in terms of, not getting enough, income, and our kids do not get it, that investment culture cannot be built. Are you getting the point? So it starts from, the current economic conditions. In fact, how should I even say it? It makes it difficult to invest. And the second problem is that the investment even available does not really, earn you much to make you sacrifice that time to put the money into the investment.
Right.
Because any investment you do is a sacrifice you are making. You are sacrificing your today's consumption, and by sacrificing, that returns you are getting is not even up to the inflationary effect monthly.
Right.
There's no way you'll be encouraged to invest. So maybe people will not think of either when they hear big investment opportunities, whether it's fraud or whatever, they go into it and then a whole lot of things happen. So maybe you should start a conversation from there. And employers can help, parents can help, the government should also assist in that regard.
Right. So high cost of living, you talked about that. Inflation as one of the issues, even though it is coming down or it is down, we are still not seeing that. You've also talked about employers, but the employers should not be concerned about whether you are investing or not, should they?
So you see, the employers also need the investment money to expand their business. when you talk about loanable funds are from our own investment. So if you are not, structuring your pay in such a way that your employees get enough to invest, remember you also suffer from getting loans from the bank. Are you getting? I don't know if you are getting.
Yeah, I get it. I get what you're saying.
So,
but if I'm an employer that I don't need loans to run my business, I have my own money, I'm doing my business. Why should I care about whether my stuff
is investing or not?
Exactly.
Okay, so you see, the issue is that as far as the person is not investing and there's crisis, you see, sometimes you have to link the way all things work.
Okay.
If you have an employer, let's say employee, who is not investing, and he runs into crisis, and is not getting maybe a loan from the bank or whatever, what happens to the employee? It will affect his productivity.
That's true.
So in effect, it will affect the company as a whole, because the person doesn't have enough money anywhere to support those, crisis moments. So as an employer, you see, you have to also think about the sound mind of your employee, where you are giving him enough.
Okay.
And let's do the calculations. Check the rent. You see, you look at his rent. You're supposed to pay maybe average rent for maybe chamber and hall monthly. How much you're supposed to pay. You look at his transportation, food, all those things. Then you now determine, okay, if I give him this, he is likely to spend everything. Then you top up.
But are you saying it's not? So it's not about the input, that the value that they're bringing to the company, but all those conditions.
That's why we have something called what do you call it? Base salary. Do you get it? So base salary should be something that makes the person comfortable. If you don't care about that, that's what I'm saying, that if you don't care about that, remember the investment culture we want to build. We are thinking about the national, challenge. Yeah. Especially why are we worried about Gen Z not investing? It's because of the ripple effect that it will have. And I'm saying that employers will also play a role if you want to curb this situation. Once we are paying the employees low salaries, there's no way, no matter how we discuss it, and how responsibly we want Gen Z to behave, they will not have enough to invest.
Okay.
Sometimes the problem may be from there, but you see that another issue is that, in this, unlike the olden times where there was not too much pressure in terms of lifestyle. You are seeing Snapchat, looking at how beautiful your colleague is. You are looking at Facebook. You are looking at people doing wonders. Even people in different countries showing that at 21 you can be a billionaire. You see, the pressure is
watching Mbappe and all of
exactly
these
watching
guys,
these young guys, 18 years. Look at one from Barcelona. What's the name? Have you forgotten? If you look at how much he's earning, yes. If you look at how much he is earning, you also want to, do well, right? So you want to dress well, you want to buy a car. Maybe your money is not even to anything, but you want to get all these things. So the pressures too are real. As far as the social media is broadcasting our daily life and all those things, you can't run away from it. And people feel even going into depression because of, looking at all these things. Yeah. And that is why maybe the person will feel like the money I have, I must spend on myself. Because I have to also show class. So all these things, factor into the culture of not investing. Just that the long-term effect too can be there. But people also will leave everything to God. There will be a miracle on the way as we move on. So maybe they find comfort in that.
So I see that there's a structural issue in terms of our economy. There's also the mindset. Exactly. The mindset, in terms of the social pressure and all of those things. What are the consequences? What are the long-term risks of delaying investments if somebody doesn't invest now as a Gen Z, roughly 29 at most, if the person is at 29? What are the risks associated with that if they delay that till, say, 30 years, 30, 40, thereabouts, before they start investing?
See, the fact of the matter is that as we grow, our responsibilities also increase. Yeah. Maybe around Gen Z, you have some of them have just started family. Others too have not even started at all. Even if you have started family, maybe your child is around 4 years, 5 years. So the real educational expenditure has not started. Are you getting it? And sometimes at a particular age, your dependents don't even expect too much from you because they know you are now starting life. Now, you let that age pass and you get to 35. where now your children are going to JHS, SHS, which has increased educational expenditure, and your family too. I mean, your extended family too. Once you have grown to that age, they feel you need to support the family. So as we age, clearly the responsibility also become more. So now that, I mean, you are within that Gen Z, that you don't have too much pressure. If you are not investing, trust me, it will be very difficult to invest. I mean, at a particular age. And the point is that you see, investment should be a culture. You know, there are some people that if you give them 100 cedis, they are saving 10 cedis. No matter the coin, no matter how they need the money, they are saving a portion. They have made it a point that any money, the way people pay tithe. I feel like if maybe our church people also, I mean, the way they encourage us to pay tithe, 10%, they also start, I mean, apart from 10% paying tithe to God, then also save 10%.
Invest 10%.
Yes, so if you are doing the two, I mean, you preach it as if it's something that is needed to survive. I'm sure it can change something. Do you get it? Because as I said, as we age, it becomes difficult. And you see, if it becomes difficult to save, I mean, from 35, 36, 37, then you can't, it will be difficult to escape from financial challenges.
Yeah, true.
Because the bills are increasing and everything is going up. And you don't have any investment to fall, to rely on when some of these circumstances happen. Okay, so personally, I feel within the 20 to 30, that culture needs to be built. So that from 30 to 40 going, whatever happens, that culture is still there. So you have appetite. And when you have seen the returns, you see, when people, if you have invested for some time, you have been seeing the returns, it encourages you to invest more. Or maybe you're investing 2,000, let's say 200 cedis, you realize that in a year, you are getting to 300. So as your salary increases, you know, when you put more here, you get more. So that culture should start now. We can't wait till later, because the later will be more difficult than now because of the higher responsibility you will carry as you age.
And what does that mean for retirement security and generational wealth building?
Okay, so as for generational wealth building, it's a whole lot of things. I know sometimes if you want to really build wealth,
you should have started
it's a whole years ago. Not even several years ago. The fact of the matter is that sometimes you look at the environment that you find yourself. So that I don't want to maybe advise people to put a lot of pressure on them. The point is that if you want to build wealth, you have to start early. I mean, you have to start, and you have to be intentional and increase it every year or every 2 years or whatever. So maybe you started saving from age 19. You started with, let's say, 100, maybe 50 cedis. You move to 20. You have started something. You increase to 100. It's a culture. So as you, and those monies, as far as it's investments, you are not, it's not part of your accumulate, like money you need for maybe day to day. You have put aside that anytime, like there's that standing order. Anytime I get this, 10% go here, 10%. So you have taken your mind out of it, and you are doing it continuously. If you're able to do that continuously, every month you are doing it, then clearly by the time, I mean, you get to 35, 40, you will see that money you have been keeping down, that's grown. Then somebody was doing a calculation on Facebook, I mean, showing, I think it's very famous financial analyst. I mean, I've forgotten the name. He was showing how any amount you put into account for some number of years, it can grow into. Wow. Do you get it? So you say if you put 100 by 10 years, that's what you get, 20 years. So this education should travel more for the Gen Zs and then the Alphas who are even now coming to the, I mean, equation. Then they will start. Okay, I can even start to 20. Move to 30 as I grow, move to 40, move to 50, and be increasing gradually. And then you can build that generation what that you are talking about. If not,
you just have to get your gentleman.
Exactly, and like you just work and eat.
Like we say in school, gentleman pass. So you are fine. You
are not aiming there. So exactly. As far as you're okay with food, then you are okay.
You're good.
Maybe
in terms of retirement, because people don't plan retirement.
Yes. I think retirement is one major issue as far as for the Ghanaian landscape is going. The only good thing is that, I mean, we have made it compulsory, especially for the SNET and those things. But I mean, the SNET is not too much, so we can't really rely on it.
On that.
And the point is that when you get to retirement age, you can't work. There's no other source of income. So if you have not accumulated enough, it's going to be difficult for you.
Yeah.
And there should be this, there's tier 1, tier 2, tier 3. Forget about the tier 1, tier 2. I'll just take it out as first net. For that money, I mean, you don't expect much.
Right.
But you should be intentional that maybe for me, I want, there are some people that will feel like I need to save enough to be comfortable after retirement.
Yeah.
So the person not even thinking about his current, he will try and survive and make sure that every month, he, apart from that tier 1, tier 2, he's also doing his own tier 3.
Yeah.
Do you get it? So, I mean, once you commit to yourself, there are a lot of pension fund companies around. They are very good companies. You commit yourself that every month, you even send just 100 CDs there. You see how that money can grow. 100 CDs every month, too. 12, that's 1,000 too. You're looking at 10 years. You do it continuously. It will grow. By the time you get to 60 years, you see maybe that money has grown to a substantial amount that can support your tier 1 and your tier 2. Yeah, so I think we need to really think about it. Because the point is that, this whole notion of, getting to retirement and relying on your children, I think it's the thing of the past. Because your children even have more pressures than you. The wedding cost has increased significantly. Now, to marry, is very expensive. That child is looking at big opportunities, want to travel. He wants to even leave you and go and lead his own life. So we shouldn't think of, but you realize that most often we spend all our money on our children, and at the end, we don't even save some for our own retirement. And when the children disappoint us, it also become a whole lot of stories in our lives. So I think we should be very intentional and make savings also towards our retirement. It will help us. Yes.
Okay. All right, John, hold on for me. Let me just announce the phone lines in case somebody's listening to us and they may want to join the conversation. If you're tuned in, this is Business Breakfast on Z101.9 FM with me, Nitrebi Hammond. And this morning we're talking about the recent KPMG report that says that a survey that says that 43% of our young people, especially Gen Zs, don't have any investment at all. And we're looking at exactly what that means for us, whether it is something we should be concerned about. And my guest in studio, John Che, he is a financial analyst, and he says that this is something we have to be worried about. There are things that there are lots of causes. The root causes are a lot, from unemployment to cost of living to inflation numbers to the mindset of young people, and all of these are all things that we have to deal with if we really want to talk about this thing very well. But very soon we're going to talk about how you can start investing. Where can you start from? What are some of the investment opportunities so that you can begin something for yourself as soon as possible? But I want to announce the phone lines in case you're listening and you want to join a conversation. Maybe you have a question, a comment, feel free to send them to me. My WhatsApp line is ready: 0544-321019, 0544-321019. 0544-321019. You can also call me on 030-3956-641, 030-3956-641, and then I give you the opportunity to ask your questions this morning. Also, we're streaming live on Facebook at ZFMGH on Facebook, and Z Multimedia on YouTube. Visit those platforms, drop a comment there, and I'll read them for you. If you have questions, I'll get John to answer them before we go. So, John, let's continue our conversation. Okay. So we've spoken about root causes. We've talked about the consequences. If you don't do that now, your retirement is at stake. A lot of things in the future. And so you have to start investing now. But maybe there's somebody listening to us who is wondering, what is a minimum realistic amount that I can start with? I can start investing with in Ghana.
Okay. In Ghana, you can even start as low as 10 cedis.
Oh, 10 cedis?
Yes. So, there are some companies.
The 10 CD we used to buy.
The normal 10 CDs, 20 CDs. You can start with any amount.
You can invest with 10 CDs?
Yes, you
in
can
what
start
exactly?
with 10 CDs. Okay, so, there are some fund managers around. And for them, they are interested in you building the wealth. So, they allow you to start with any amount that you want to. Just that they encourage you to be consistent with the amount. Okay. So, if you are selling, say, 10 CDs, every month, you are sending your 10 CDs to them. You are sending 10 CDs. Maybe if you can start 50, 100, any amount, you can start with it. And the major issue is that you have to be consistent. So that every month, so because if you are giving 10 CDs every month, 10 months, that is about 100 CDs.
Yeah.
But if you can, looking at your current income, if you can, maybe personally, I feel like 50 CDs will be fine. Start with 50 CDs. be intentional about it, and then I'm sure it will grow. Now, the issue is that, now clearly treasury bill investment is not attractive, right? Looking at the rate. And I always advise people that, the fund managers can really give you, there are a lot of fund managers around. When you go, you tell them that this is my monthly income. This is how much I can invest, maybe 10%. They can help you get a very good package that will earn more than the treasury bill rate.
Okay.
Some of them, can, I know some companies, some fund manager giving about 20, 15, even as the current rate is around, 6%, they are giving about 15% and the rest. Okay, so, just approaching of the fund managers. The Bora Capital, IC Securities, they are all examples of companies that you can get in touch with them, and they really help you with your investment needs. If you also want to buy shares and the rest, I think even MTN, Momo, they have a way you can send money. Yes, and now shares have become very profitable. I think for 2025, it generated about 45% return.
Wow.
As far as the annual rate is concerned. Yeah, which is huge, far more than the treasury bill now going around 10%. Okay, and now they have made it easy. IC Securities, for example, if you want to buy shares, now it's easy. It's not really complicated like first. You can just get in touch. There are a lot of brokers apps that you can download, and then you sign up, and then you'll be doing that. Either monthly purchase of. As for shares, even though it's for long term, but in the long term, it will benefit. That's why I say for investment, don't think of something you need urgently to spend, something you want to build for your life. Not for the current expenditure. So money you have set aside, this money you don't need it except in emergency situations. And I think the one who always say that have an emergency fund where maybe apart from all these things you do, make sure so that not that every situation you are going back to investment bank to withdraw your money. Have an emergency fund, maybe 10%. This emergency, in case of emergency, there's the money out. Then you build it. So that one is even separate from your normal investment that you are doing. And it can, help you a lot to, put your money in the long-term investment.
I want us to be very practical about this. So let's say if a young professional, somebody listening to us this morning, earns 2,500 a month.
Yes.
2,500 cedis a month. How should they structure savings and investments?
Okay, so if you're earning 2,500, most often, you can share in this way.
Okay,
you can decide that, assuming even daily, looking at maybe our food. I want to be very practical about this. Let's say you spend 100 cedis on every day. Let's say if you are spending 100 cedis, that is 2 times 200. So you don't get anything to save. Assume you even want to say spend 100 cedis daily. So it means that as for food, you have to structure in such a way that the maximum you are spending is about 50 cedis.
Right.
Which practically is especially when you are married and you are within that age, it will be very difficult. And that's why practically, then it's like the person should forget about marriage for now. Because for marriage, you can't spend less than 100 cedis in a day. So that's why you see when I started, I was talking about how employers should also go about how they structure salary. Because assume you employ a married man, and that married man, you are giving the person 2,500. Imagine, you are telling the person, if just for food, 100 cedis a day. But Mr. Hammond, what kind of 100 cedis buy? Let's be practical about it. Even just cocoa can cost you about 20 cedis. And if you're going to go to the market to buy food items, you won't spend less than 100 cedis. Even the chicken itself you want to buy or the fish is around 40, 30. So you see, practically it makes it difficult for people to save, especially the current income that we earn in this country. And over 80% earn less than 5,000 in this country. Over 80% by Ghana Statistical Service. Over 80% earn less than 5,000. So that's the dire consequence or situation of our environment, which you can, because you see transport, even if you are, going very close places, you won't spend less than 5 cedis. So let's say 5 cedis in and out, 20, you spend about 20 cedis on transportation. 20 times, 20, that is about 400. So I spend 400 on transportation. Assuming even the 20 cedis, you are close to your workplace, that is 400 on transportation. So food, so should you maybe you have to find a way to spend 50 cedis on food. I don't know how, but you have to. Maybe by divine something, you have to. And then you have to buy in bulk. You also fast alongside. You buy also in bulk so that now you have plenty and you cook. It lasts for a week, 2 weeks, and the rest. So these are practical things that young people, Gen Z people go through, and that's why I don't even find this 43% troubling. Especially looking at how much people earn. Yeah, are you getting it? You start work. Maybe as even university graduates, even audit firms, which are big firms, they were about 3,000, 3,500. You get look at the calculations we are doing, and the person takes transport to the place, eats every day. I mean, you see, so and then if it's a person married, taking care of the children, practically it will be something. Impossible to save. But no matter what, you see, as you are earning 2,500, take it upon yourself that what if I was earning 2,000? So sometimes you intentionally come down a bit from the salary you are getting and see that if you were earning 2,000, how would I have cope for the month? And assume that 500 extra is not there. So that when that 500 extra comes, it's going into investment and savings. Maybe part 200 into your emergency fund. Emergency fund is very, very important because anything can happen any time and you are called upon to help. So put 200 in your emergency fund like savings. Most of that one is savings. Then 300 into investment. So whatever salary that you are earning, you have to come down. That, okay, what if I was earning this? How will I manage it? And save the rest. That for this one is for the future. Because you don't know how that salary is going to grow as you age. Some of them can earn the same amount for about 10 years. If it's increasing by inflation, it tells you that your current income, which is, let's say, 2,000, will get to 4,000 in 10 years' time. That's the reality. If it's even going up by the way we increase in salaries in our environment, especially if you look at government, 10%. So for your salary to double, that's going to take about 10 years. These are realities. So if you're earning, let's say, 2,000, you get into 4,000. By that 10 years, you have children, children, you have family. Because you have grown, they want you to take a higher responsibility. So if you don't now think of reducing that salary and saving the rest, you can never save as far as you. And there's no way, but maybe there are some people as you, then there's big opportunity, then the salary just goes up. It happens. People be earning 2 times, get one opportunity, they are earning about 12,000, 20,000. That one happens, but it's rare. So you have to be practical. To save, you take, always reduce your salary a bit and think of it as something that you were not earning and invest that. Maybe always 500 down will help. So that it's 500. If 500 is too much, maybe even 200 crowd will go into investment or help.
Our time is fast spent because, of course, we didn't begin this conversation very early. So there are quite a number of things to touch on. But what low risk investment opportunities or options, would you recommend to young people who are listening to us this morning?
Okay, so for the current environment, we don't really even know whether there's something called low risk, especially when government has failed in the past. It's something that has never happened. It doesn't happen. Do you get it? So at first, I will say treasury bill is the safest. But our situation is making it big. Our current, our past, our history is making it even a bit debatable. But if you don't want any risk, remember you also don't want huge returns. I think you have to understand that as an investor or as a young person, that if you are going into low risk investment opportunities like treasury bills, like mutual funds, those ones are lowly risk. If you want to go into that, don't expect high returns, right? You want to build it gradually. Then you can go into those, investments. Maybe treasury bills will help, mutual funds will help. And as I said, there are fund managers. You can search for them. Maybe they are registered fund managers whom you can talk to. They will give you clear, based on your income, based on your risk appetite, they will do a good recommendation to you so that, you can start investments now.
All right, John, because of our time, we have to go now. I wanted us to look at the policy angle as well, but unfortunately, we can't do that today. Maybe your final words and then we can go.
All right. So I think my final words will be that, we need to start investment, whether you are earning much or less. That's why I said you have to think about the future. As for future, today is certain, so you know what is happening.
Yeah.
But future, you have no idea what will happen.
True.
So it's always better to plan ahead, so that when it happens, you have something to cushion yourself.
Right.
Assuming a crisis happen and you are not getting loan from any bank, friends are not helping, whatever, how are you going to survive? You can go into depression or kill yourself. So let's start something now.
Okay.
I mean, let's start building. Even if it's 50 CDs, just be consistent with it. You see how it will grow.
Okay.
If you don't start big, just start small and continually do it. Even if it's 50 every month, save that 50 or invest that 50 CDs. You see the returns very soon.
Right. John Che, thank you very much for your time. I'm really grateful. John Che is a financial analyst, and he joined me this morning on our roundtable discussion talking about how the economy, the current economy, is actually shaping young people's investment choices. And we've talked about quite a lot of things. If you missed any part of this conversation, please visit our social media platforms. On Facebook, we're at ZFMGH, and on YouTube at Z Multimedia. I have to leave now, and so that's how we wrap up today on the Business Breakfast on Z101.9 FM. Thank you so much to my guest, John Che, for joining me, and thank you too for listening right from 6:15 till now. We're back again tomorrow for some more interesting conversations. This is where you get all the business nuggets. This is where you get all the economic stuff, the market trends, everything that you need to be able to make informed decision when it comes to your business, your finances, anything that has got to do with things along those lines. This is where you get it. So keep listening to Z101.9 FM. My name is Nitro Ebi Hammond. I'll see you tomorrow. When you think Ghana, think Z. Up next is The Brighter Side with Jeremy Okoria Mwako.